All right, everybody, Stocks by the Numbers, welcome back. Real quick, just wanted to do a quick update here on Roku because we've been watching this stock here for the last couple of months, and I said in my opinion I like it. The revenue seems to be growing nicely over time, and it seems like last quarter here we just got earnings and we can see that the losses are potentially starting to come in check here. Company posts a more narrow than expected loss here. Wall Street estimating a loss of almost 61 cents. Company posts a loss of 35 cents, beating that estimate by almost 42.5%. And look at that revenue coming in almost 38 million, roughly 4.5% above estimates here, 843.5 million. The company comes out and posts over 881 million. So very nice quarter in my opinion for Roku. They potentially warn supposedly of, like future ad spending and competition in the space. And apparently that was the single catalyst that drove the stock lower. And in my opinion, of course, you could make the argument in the fundamentals that they're not quote unquote perfect, if you will. So if you're looking for more of a sell-off here in Roku, I suppose I can understand that. But again, in my opinion, I always say that personally, based on my experience and how I see a lot of these stocks move, sometimes they make moves that we quite don't understand. So after seeing these numbers come out, you may have expected a 10% move to the upside, and instead we have a stock pulling back 10.25% today, down 6.5 points. So this is why I say that personally, I like the strategy of piecing your way in and not necessarily going all in. And if we look at last quarter here, again, the company came out, beat on the top and bottom lines, but they chunked the stock down. And I was personally saying that, in my opinion, it really should fight and try to get back above the trend lines. And of course, it happened to reject and go lower before going into this quarter's earnings. But this is why I say, again, in my opinion, I like the strategy of piecing your way in, building a position here, maybe in the low to mid 60s, then all of a sudden the stock starts pulling back, right? Now it's at 57, 56. Maybe you can add some shares before earnings. We have a nice bounce. And now, boom, we drop down again. I did mention that, in my opinion, if we did hit the bottom trend line of this potential descending wedge that we're in, we'd be looking at maybe about 55.5. If the stock wanted to pull all the way back there, we can see 56.10, and then we had a little bit of a bounce. So this is why, again, in my opinion, I like the strategy of piecing our way in. And even if we continue downward and stay in this wedge, you can see we're going to potentially get to the 54s and maybe even the high 53s by the time we hit the apex and potentially break out. And that's why, in my opinion, to consistently add to a position and try to average down on these dips, lower your cost basis, and deal with the short-term volatility for that potential long-term growth, in my opinion, I do believe that is one of the better strategies. And we can see here, I drew out kind of like this long-term support trend line. This long-term support trend line, and you can see that if we do happen to break below this wedge and happen to drop down here, you can see maybe we're looking at about $48 a share. So we could definitely continue to sell off here potentially, especially if the markets decide to start chunking down as well. But in my opinion, it looks like maybe over about the next 3 to 4 weeks, we could kind of just bounce around inside of this channel and potentially approach this apex and break it up and out, maybe back to this fib level here of about 63.25. And of course, even if we have a slight rejection, we could then potentially bounce and break through and try to rally here going into July. That's when next earnings are coming out, the end of July. And, we might even be able to get back to the low to mid 70s and try to reclaim one of these trend lines going into this earnings here, gaining some momentum. Because again, I appreciate the fact that we could make the argument, like I said, well, liabilities have been increasing, the book value per share is kind of getting chipped away, and we saw also the company swung to net income negativity here over the last couple of years, but the growth in revenue is still there, and in my opinion is growing nicely, even looking at 22 to 23, going from 313 billion up to 348 billion. So, that's over 10% growth. And the problem now is I feel like they're just comparing previous years to now future growth. But yeah, let me see if I can find that article I was looking at before. Warning of tougher comparisons. Video streamer said in a letter to shareholders Thursday it would face difficult year-on-year growth rate comparisons within streaming service distribution activities. The company attributed the issue to past price hikes and a shift toward ad-supported offerings. Roku said it was expecting revenue $935. That's in the July quarter coming up, which would represent growth of about 10% from a year earlier. And that's what I mean. We look at past performance, or we look at how competitors are doing, and the fact that a company is able to grow its business roughly 10% year over year and is viewed as a negative. Honestly, never thought I'd see the day. But Analyst here, you can see on average looking for about $934.5 million. So the company supposedly right now expecting revenue basically in line or slightly above what analysts are expecting for next quarter. So in my opinion, that's a good sign. They just posted a more narrow than expected loss. That's a good sign in my opinion. They just beat on revenue again, right? So that's a good sign in my opinion. The guidance also signals a deceleration in growth for Roku. See what I mean? Revenue was up 19% in the first quarter and top Wall Street estimates. So we know though, as these revenue and earnings numbers get higher and higher and higher, you're going to eventually start seeing a smaller percentage of that number, and it's going to translate to, technically a smaller percentage growth in revenue or earnings quarter over quarter, year over year. But again, looking at the growth in Roku and just the fact that they grew more this time last year, again, they were bringing in less. So the percentage of upward momentum is going to be a larger percent from a smaller number to now a larger number, right? So, that's why even, if we looked at it like that, I mean, we could bash even all the large tech stocks and say, oh, they're only seeing, like 3% growth year over year, quarter over quarter. But now it's on billions and tens of billions of dollars that they're seeing that 2, 3, 4% growth, right? It's no longer on, 400 million. So they already went through those levels years ago, right? So going from 4 to 500 million is a 20% growth. But, if we go from 2 billion to 2.2 billion, in my opinion, that's still good growth, but now that's only 10% growth from a larger number. You understand? Even though technically that was 200 million growth, and you used to see quarters of 100 million growth, hypothetically, in our example, right? So that's why something like this, in my opinion, I really don't know if I would have personally beaten the stock up. But again, if we want to make the argument that the company's still sitting here at EPS negativity and, the book value kind of getting chipped away, I guess I can appreciate it. But again, it looks like to me, in my opinion, we're in this descending wedge and probably going to be a couple of weeks before we potentially pop and break out. But if I liked it at, 65, 62, if they want to keep beating it up here, 56, 54, 52, in my opinion, I would obviously say thank you, and I would personally add to the position and lower my cost basis, but again, that's just my opinion. But you can see even a price target cut like this from Piper Sandler from 81 down to 65, still currently higher than where the stock is currently trading. Roku maintained that outperform by Wedbush, maintained that buy by benchmark. This is what I mean. This is why I'm saying they may have brought it down 10% this quarter, but in my opinion, it seems like most analysts still see the long-term growth there because the growing market share, the growing revenue, consistently coming in above estimates quarter over quarter, it just cannot be denied. That's why, in my opinion, there is value here. Maintained that neutral by Rosenblatt. Roku price target maintained $100 a share by Needham. See, and this is what I mean. Supposed competition warning eclipse Q1 revenue beat. And again, this almost reminds me of something like a Snapchat, right? Because that's what I mean. I just did my personal earnings prediction video. I actually went back, instead of just going strictly off my instincts and my gut, I actually went back to look at the forecast of all of those 14 stocks that I reviewed. And I really wanted to make sure I had all the T's crossed, all the I's dotted. And what happened? My success rate was only about 50%. So I actually did less by potentially over-analyzing in the situation. But again, these are just forecasts, and it's not necessarily set in stone. And, just an example like that Snapchat, they were forecasting potentially coming in with a wider loss on the EPS side, and they also lowered the guidance of the revenue range that they were forecasting for this quarter. And then what happened? All of a sudden, the ad revenue came in higher than expected, and everything's fine, and the company beat on the EPS and revenue side, and the stock chunked up 30%. When, again, in my opinion, I was personally calling for puts because I was going based off of what the company told me themselves, right? So that's why, as of right now, warning of potential, increase in competition and ad risks and all that, in my opinion, I would take it with a grain of salt because it's not an issue until it's an issue. So if we see a dip down next quarter and they happen to miss on revenue for the first time in 7 quarters, mind you, if they happen to miss on the revenue side because of ad issues or something like that, then we can potentially reevaluate the situation and we could potentially jump ship and try to get it down the road and re-enter it at a better price. But as of right now, it's not an issue until it's an issue. And we had these big gap downs. And again, I mentioned potentially getting to about 55.5 maybe at the bottom end of this range. We got to 56.10, but overall, I still stick to my guns here, and I still say there is growth to be seen over the long term with a company like Roku. And we can see Wedbush, again, keeps outperform rating, lowered the price target to 75 from 80. Again, 75 is, back up here above this gap fill, almost getting back to where the initial chunk down was. And of course, 75, 25 points on 56. We're talking about roughly a 40% move that Wedbush is anticipating here over the longer term. So that's why, in my opinion, they could lower their price targets and they could try to chunk it down here after earnings. But in my opinion, was a really, really good quarter. Nice beat on the top and bottom line for Roku. So this is why, again, they could lower their price targets slightly. But I think, in my opinion, they all kind of know that there's growth to be had here with a company like Roku. But overall, I still like it. I do still like it. And again, even if it happens to break out of this wedge and this doesn't come to fruition and it starts to chunk down here to sub 50, again, in my opinion, the stock was on the up and up basically since the bull dropped in 2023, getting as high as 108, almost $109 a share. Now we're sitting here at almost about half price of that. Now, of course, again, past performance doesn't dictate future results, but we can see, even minus this big explosion here throughout 20 and 21, we can see that for the most part, the stock seems to be following an upward trajectory over these years. And again, the reason for that, in my opinion, is because of the consistent growth in revenue quarter over quarter, the consistent growth in revenue year over year. So we know that sometimes these stocks go through these transitional phases and have these couple of quarters or maybe even a year or two where they're in these downtrends. But usually, if the company, of course, has a decent management team, they'll eventually find that bottom, establish that U-turn recovery, and then all of a sudden we're back to business as usual. And, I look at a similar situation, something like PayPal. Right? We looked at PayPal, I think the first time I looked at it was here maybe when someone was talking about earnings, and in my opinion, I thought it was pretty fundamentally sound. They ended up chunking it all the way down from 74 down to new lows here of 57. Look at that. The company missed on the EPS side by half a cent, but beat on the revenue side as they do. Right? Going back the couple of quarters before, that was one miss there, but we can see on average the company comes in above expectations for the most part. But you can see they brought it all the way down. They basically climbed it back up to where the initial chunk drop down was, and then they had it retest and actually break this bottom long-term wedge, it looked like, and break that bottom trend line going into these earnings. And then what happened? The company beats on the top and bottom line, and then all of a sudden we go from 50 and we rally all the way back up to the high 60s, right? And then we come back down into last quarter's earnings, and as you can see, another beat on the EPS and on the revenue side, and now all of a sudden, we can't beat it up really too much anymore, and we go from the mid 50s all the way up back to the high 60s. And now we're bouncing around with a little bit of momentum, it looks like, for the last couple of days. And we have earnings coming out Tuesday before market open. So, in my opinion, of course, on the fundamental side, it is a slightly different story because PayPal liabilities haven't been growing at the same rate, and the book value per share has actually been ticking up as opposed to ticking down. So this is why I'm saying, in the moment, if they want to beat up Roku, I guess I can understand that argument and I can appreciate where they're coming from. But overall, in the long term, I think it's only a matter of time before that company, really bottoms out and really starts to turn it around. Because I know that last quarter, people were talking about the losses, and it might take a while for them to get the losses in check, so the stock could be viewed as overvalued. But now we see this quarter, the company comes in over 40% above these estimates and posts a loss of 35 cents off estimates of almost 61 cents. So, in my opinion, this is actually a much, much better sign than the revenue. But overall, in my opinion, I like it. Just wanted to point out a couple of points we could potentially drop to. Like I said, this long-term support trend line, maybe about 47.5, potentially $48. But as of right now, it looks like we're going to potentially stay inside of this wedge channel, and maybe inside of the next couple of weeks, we could potentially break out and try to run back up to the 70s and reclaim that trend line. But we'll look at stock charts real quick and I'll let you go. We can see also the RSI is potentially lining us up for a little bounce as well. And we can see the RSI was running to about mid-range here going into earnings, almost got back to that 50-day moving average. And then, of course, we had the big chunk down. But right now, RSI on the daily sitting a touch above 37. And we can see the MACD dropped and is very close to potentially meeting up and trying to cross to the downside. But again, our bottom Bollinger Band here on the daily was 56.01. Stock hit 56.10. RSI close to 30. So that's why I'm saying we could potentially see another slight down day, and it could bring us down to 55.5 and maybe even a little bit lower. But then technically, in the technicals, we could have the RSIs lining up towards that 30 quote-unquote oversold benchmark, and then we could maybe have a pop back up like 10% and try to reclaim that mid-Bollinger Band value of about 60 1/3. So even if we do have that slight dip before bouncing, I just don't know if it'll be enough of a drop to cause a cross downward to the downside on the MACD to really accelerate the sell-off. But again, this is my opinion. Even on the weekly, too, we can see, this is what I mean, RSI now sub 34.5. So this is why I'm saying we could potentially trickle down a little bit more, but then the RSI will probably, in my opinion, signal an attractive potential bounce to traders, and that's when volume could potentially come in and we could take the stock back up to 60s. But we can see bottom Bollinger Band on the weekly now, 46.43. which again technically would be below this long-term support level. So I personally think that would be an overreaction. But of course anything can happen. We know this. MACD seems to be just steadily heading downward. But in my opinion, as of right now, I feel like this is the wedge pattern to watch. And again, almost similar to something like a PayPal, right? If we want to try to chunk it down, quarter over quarter and then sell it off and beat it up where we can, it would be kind of understandable in my opinion. But again, over time, we can see after beating it up, as much as we swing something like a PayPal here based on potential weak guidance or again, the EPS missing by 0.5 cent, so they chunked it down 30%. We're going to have to deal with this short-term volatility if we're looking for long-term growth. And I think we understand that by now. And that's why a situation like Roku, if you were trading it, obviously if you jumped in calls, you got that one incorrect. So it seems like a stock that, in my opinion, it may be hard to time, which is why myself personally, if I was going to take a position in Roku, I would probably lean more towards the actual shares as opposed to trying to time an option or a bounce. But again, if this wedge does come to fruition and we approach the apex, if you want to step in some calls, understandable. It sounds like a decent strategy in my opinion. But again, personally, for me, I would probably be looking for shares of Roku, not options. And again, if they do want to step it down and break it to the low 50s here and drop it out of this wedge and try to approach this trend line, like I always say, if I liked it in the 60s, I'm going to like it even more here in the 50s. And if they bring it down to the low 50s, high 40s, in my opinion, I'm going to like it even more because, again, the growth in revenue here, seeing that increase in market share, and just the shift that's taking place in the entertainment industry here to these newer companies like the Rokus, the Fubos. In my opinion, that's why I'm personally kind of bullish on those couple of stocks. But I'm gonna end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that these markets are rocky, they're volatile, they're hard to time sometimes, they're very uncertain. So I want to wish all of you success. I hope everyone had a decent week. And hopefully moving forward, we have bigger and better things to come. Have a good day, guys.